Welcome to today's Explainer. We're jumping right into something today that is literally the foundation of modern finance. We're going to explore the core engine of how the stock market actually builds wealth. Everyone knows it exists, but surprisingly few people truly leverage how it works under the hood. Well, today, we're breaking the whole thing down. To really wrap our heads around this, I want you to imagine two friends. They graduate from college on the exact same day, they're in the exact same field, get the exact same job, and even start with the exact same salary, okay? Now, fast forward 30 years, one of them is retiring totally comfortably with millions of dollars in the bank, while the other is still sitting at the kitchen table, stressed out, worrying about paying the monthly bills. Now, here's the crazy part of the story. That wealthy friend, they didn't go out to their garage and invent the next billion-dollar tech company. They didn't win the lottery. They didn't even climb the corporate ladder to become some hotshot CEO. No, they just made one absolutely crucial mindset shift early on. One simple decision that completely altered their financial trajectory for the rest of their life. They decided to become an owner instead of just a worker. When most people hear the words stock market, a pretty chaotic image pops into their heads, right? Flashing red and green numbers, guys in suits yelling at each other on Wall Street like it's some high-stakes sporting event. A lot of people view it as just a giant casino for getting rich overnight, or basically like buying financial lottery tickets. But that is entirely wrong. That is completely missing what the stock market was actually built for. Okay, let's dive into this. Because at its absolute core, the stock market isn't a casino. It's an ownership engine. When you buy a share of stock, you are legally claiming a tiny fraction of a massive, living, breathing business. You aren't buying a lottery ticket hoping for a lucky draw. You are buying an actual ownership stake in real-world commerce. And remember our wealthy graduate from earlier? This is exactly the realization they had.
So you might be wondering, how does this actually translate into wealth? Well, it's a simple, continuous loop. Say you own a piece of a company that sells really great products. Every year, it earns more customers, it uses that new revenue to develop better tech, or maybe open new locations, and it generates bigger profits. Because the business is fundamentally making more money, the stock price rises over long periods of time. It's not magic. It's not just some guy in a back room pushing a button to make prices go up.
And this brilliantly illustrates one simple, inescapable truth. Your investment grows because the company grows. Successful businesses generally become much more valuable over time as they serve more people and make more money. When you hold a share of stock, your financial fate is tied directly to the fundamental boots-on-the-ground success of that business. But there is a secret ingredient to this whole process that most people completely miss, and it is exactly where the real wealth-building power lies. This is the exact tool our millionaire graduate leveraged. Let's say we introduce a starting investment of $1,000. You take this money and you buy shares in highly productive companies. Now, what's really interesting here is seeing the math of compounding wealth in action. Let's say in the first year, your investment grows by 10%. Your $1,000 becomes $1,100. Pretty good. But the next year, you don't just earn a return on your original $1,000, you earn a return on the entire $1,100. The year after that, your returns are calculated on an even bigger amount. It's literally like a snowball rolling down a long hill, picking up more and more snow. Fun fact, actually, Warren Buffett made over 90% of his massive wealth after his 65th birthday, simply because his snowball had been rolling for so incredibly long. And that brings us to the single most important takeaway of the whole snowball metaphor. To get a massive snowball, you need a very long hill. Time does almost all of the heavy lifting, not luck. Not picking the absolute perfect moment to invest. Accelerating your wealth relies purely on letting that snowball roll uninterrupted for years and even decades. But if time is the key, why do so many people fail at this? Well, it's because they get entirely distracted by the short-term roller coaster. You know how it is. Prices jump up, they fall down. Bad news hits the media and creates widespread panic. Good news creates completely irrational excitement. But if you just zoom out, the long-term reality is actually a mountain of growth, steadily marching upward alongside the expansion of businesses and the overall economy. Think about it. How do the world's most successful investors actually win? I promise you, it's not by guessing tomorrow's price jumps. They win through steadfast patience. They ignore the short-term panic, they completely tune out the short-term excitement, and they focus entirely on the long-term growth of the businesses they own. Most importantly, they commit to staying invested for years. This is exactly why patience beats prediction, every single time. Honestly, if you take away just one thing from today's explainer, let it be this quote right here. The stock market doesn't magically create wealth. Businesses do. The market isn't some wealth-generating machine all on its own. It's simply a bridge. It's just the infrastructure that connects ordinary people like you and me to the highly productive, wealth-generating businesses of the world.
Just think about what is happening behind the scenes while you just go about your normal day. When you're an owner, every single product those companies sell, every new customer they acquire, every new innovation they launch, and every single dollar of profit they record, all of it is actively increasing the value of your companies. You essentially have thousands of talented employees around the world, engineers, marketers, logisticians, going to work every single day to increase the value of your ownership stake.
So the crucial point is this: your income alone is rarely the biggest difference maker in building long-term generational wealth. And this is exactly what held back that second college friend in our story. Why? Because every single paycheck has a limit. There are only so many hours in a day you can physically work. There's only so much your boss is ever willing to pay you. If you only work for money, your wealth is strictly capped by your time and your physical effort.
Bringing it all back to our two college graduates, the one who retired a millionaire deeply understood this truth. Owning productive businesses allows your money to grow while you sleep. By making the choice to become an owner, they stepped completely out of the limitations of their own physical effort. They leveraged the greatest financial engine in human history to just quietly build wealth around the clock.
Which leaves us with one final, incredibly important question to ask yourself today. Will your money start working alongside thousands of businesses tomorrow? The ownership advantage is out there waiting for you, but you're the one who has to make the decision to step off the sidelines and actually become an owner. Thank you so much for joining me for today's Explainer. If you enjoy clear, simple breakdowns of money, investing, and how the economy really works behind the scenes, make sure to hit subscribe. There's a whole world of finance out there, and I promise you, it is way easier to understand than most people think. See you next time.